This is Alan Bush with the Daily Financial Forecast for Tuesday, September 13th. Starting out with the stock index futures, first of all, we had some very strong gains yesterday. This after a Fed governor indicated that the case for raising interest rates at the upcoming meeting was less compelling. However, prices lower now as some traders think that the gains yesterday were overdone. Also, we do have crude oil prices coming under some pressure, so that a negative for stock index futures. Longer term, though, we do feel that the main trend is higher. And once the Fed meeting is out of the way, I think the bull market will resume for all of the indices. And of course, we do have the Fed meeting scheduled for September 20th and the 21st. Now, moving over to the currencies, seeing the euro currency trading a little bit lower this after some weak economic numbers. In fact, we had the German sentiment index coming in a bit weaker than expected. Also seeing the pound under some pressure after inflation numbers in the UK coming in less than expected, coming in up 0.6% against a guess of up 0.7%. Also, we have the yen trading lower on the continuing belief that when the Bank of Japan meets on the 20th and the 21st, that there's a very good chance that they will be adding more stimulus, possibly making their negative interest rates even more negative. So that putting some pressure on the yen. And of course, the Canadian dollar and the Australian dollar lower in their usual direct relationship with the crude oil market, which is, as we mentioned, under some pressure today. Now, moving over to the interest rate futures markets. On Wednesday, we saw some pressure developing. In fact, late in the week, that weakness continued. In fact, severe weakness continued as we plunged through major support areas in the 30-year bonds. Even today, we are seeing futures just a little bit higher, as they should be with stock indices under pressure and crude oil lower. But the bonds are only marginally higher. You would think they'd be a lot better off than they are right now. So I would have to say the bonds are very much underperforming the news. That has been the case now for the last 5 or 6 days. And that is a clear sign that the main trend is lower for the 30-year bonds. So any strength that we do see should be used as a selling opportunity. We also believe that the main reason for our outlook for lower bonds is that inflation globally will gradually increase and ultimately accelerate. And that will remain a major headwind for the 30-year bond future. So look for gains to be limited today in the bonds. Longer term, I think there's a lot more to the downside in the 30-year Treasury bond futures. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.